author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the October 4th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome is to help you to become a better money master and to provide you with the tools that will help you to lead an inspired life. Because, folks, leading an inspired life, there is nothing better on the planet. So let's go take a look at one of our tools. I love this tool. I think you will as well. In fact, I gave you a little clue before the opening of today's show. If you were listening to that rendition by Rod Stewart out there, and the tool, folks, is a smile breeds a smile. Now, I want everybody to exercise this morning, and the first thing is just simply take your face, and I want you to put on the biggest possible smile that you can. When you do that, I guarantee that you're going to feel a little bit better than you did just a moment ago. You know, smile, and the world smiles with you, folks. Cry, and you cry alone. Let me say that in a different way. Everyone, and I mean everyone out there, likes to be around someone who smiles easily. And you can do it, you know, if you take a look at strangers when they pass in the street, if one smiles, the other is what? The other is likely to smile back at them. Go ahead and try it. The entire day today, you know, as you are walking around, maybe you're in an office building, you know, up and down the escalator, elevators, just passing people in the hall. How about your co-workers out there? How about just simply strangers? Maybe you're walking outside. For the entire day, all I want you to do is one little exercise. It's your exercise with your face. But it will do so much. You will touch the hearts of others. They won't even know why you're just simply smiling at them. But everybody loves someone who smiles. So why is it that we don't do that? Or, you know, maybe you do every day. And if you do, that's just simply because a smile will breed another smile. I want you to test that out, you know, because no matter how brief that smile is, it can uplift each of us. You know, when I started doing these shows, and we started going that, no, actually when I started doing these shows, but when I started doing TigerTV, one of my clients sent me an email and he said, Steve, just smile a little bit more. Now, I always thought that I did. But in reality, and I'll never forget that, it was one of the greatest pieces of feedback that, and quite frankly, you know, that was given to me ever really since I started doing these shows or doing Tiger TV. If you're listening on the radio, well, that's great. You can always catch an archive of these shows on Channel 9 on Tiger TV. And, you know, maybe you're listening on your mobile device, tfnn.mobi. But just that little smile out there. And so, you know, I want to thank John. He was the one that had passed that along to me. I know he meant it in the best of ways. And there's not a day where I don't really think about it. So it's great because, you know, you can have an impact on folks as well. There are three simple words that almost seem to have a magical effect on each of us. I want you to write these down, folks. Three magical words, and they will help to make sure that you've got a positive attitude and help you just simply feel good. It's the following. Feel supremely happy. If you started each of your mornings and before you got out of bed, you did your smile exercise and you said, you know what, no matter what happens today, no matter whether the market goes with you or against you, you're just simply going to smile. You're going to feel supremely happy. And that is what it's all about, because what it will do, folks, it will go ahead and make a shift change. And making a shift change is what it's all about, because it's what you're focusing on. Remember, when you take a look at your entire focus, if you will, it really boils down to three elements. It boils down to your physiology. Well, now we're talking about the physiology of the face out there and smiling. That represents about 55 to 60% of your entire state of mind. The next thing is going to be your focus. Well, shoot, if you're focused on smiling or maybe touching somebody or making somebody else happy, that's a beautiful thing. You're feeling supremely happy. You're going to make somebody else. You know, and the last 10% is really the words that you choose out there. And words oftentimes are triggers. Sometimes in trading, you know, the word might just be full moon. Maybe it's new moon out there or what have you. But a smile, folks, it is absolutely contagious. I want you to go ahead and do it. I want you to test it. Smile today. Just think, Steve-O said, I want you to smile at everybody that you run across. Let me leave you with this last thought here. Then we'll go take a look at the markets. Got the markets trading up here this morning. And let me leave you with this last thought out here. You're probably familiar with the phrase, the shot heard around the world, right? You've probably all heard the shot heard around the world. And the reference to that, folks, is the bullet that began the American Revolution that was fired at Concord. Now, what the world needs, okay, the world needs the smile heard around the world. And it starts with you, folks. It starts with me. I'm smiling. My heart is smiling. I love being here with you. A smile, folks, is absolutely contagious. Smile upon me. Give us a call at 877-927-6648. Let's go start taking a look at these markets out here. Let's go see what kind of contagion we've got going on right now. We've got the Dow futures up about 55 points or so. The ES Mini, that's what we're looking at here on my screen, traded out at 1452.50. It's going to make a run, certainly for the highs out here. The highs right now, we're just looking at an intraday chart, and we'll take a look at the daily. That just 1457 is the high that came in at 11:30 on September 25th. Now, I've cleaned up the chart here just a tad. In fact, let me get rid of that red line there. That is Super Mario Day, I believe, September the 13th. It is. I'll just go ahead and leave that red line on the bottom there. But when you take a look at this little chart, if you're watching us on the screen, you know, I wiped off some of my A, B, C, D patterns out there. What is it that you actually see? You know, here's an expression of art out here. But if we take a look at just simply coming off of the lows, back in, and this is, you know, for those of you that you're just starting to say, you know, I'd really like to understand this technical analysis stuff. You know, where is it that you start out here? Well, how about just simply starting with a clean palette, taking a look at this chart here. Now, we're looking at candlesticks, and what we're doing is we're seeing, and this is a 30-minute chart, so each bar represents 30 minutes out there, and we're just simply taking a look at how price is moving. So when you take a look at just simply coming off of the low right out here, this low that was put in at 11 o'clock in the morning on September the 26th, one of the easiest things for you to take a look at to get an idea for what the trend, right? You've heard the trend is your friend, the shot around the world, the smile heard around the world, because that's going to start with you. But when you start taking a look at this trend out here, what is it that you see? Do you see, if you just take a look at the lows, here's a low right out here, you know, a significant low where you see a significant trend change. That came in at, again, at 11 o'clock, 11:30 on September the 26th. How about this? This is a higher low out here, isn't it? This is the one coming in at about midnight or so on September the 30th. How about this next low that we've got out here at about 2:30? Looks to me like a higher low. How about this low, this little spike down here that came in at 10:30 in the morning on October the 3rd? That was yesterday out there. Well, take a look at that. How about if we take a look at the highs out here? What are we seeing? We're starting to see what? Higher highs. You've got higher lows. Yeah, I'm sorry. You've got, yes, you're making higher highs and higher lows. Certainly says that even though the market has been basically chugging sideways, really, if you take a look at the intraday chart, isn't it really chugging sideways but higher? Isn't it in this little bullish run out here? In fact, you know, yesterday we were fortunate enough to have our man Bud Rolfs call in, talk about a stock that just simply, you know, he called in, gave us a tip on the radio that, you know, only made about 160% gain yesterday. Apparently, I wasn't listening loud enough. That's the last mistake that I'll make there doing that. But if we just simply take a look at just some channel lines out here, you know, most trading packages have the ability to go ahead and create channel lines. What you want to make sure is that you are creating and that you've got at least 3 or more co-located opens and closes. I'm going to do this quickly here on the show, so it may not be perfect, but what it's going to be outstanding out here. And if we just simply take a look at the trend that we've got out here, here's the price channel. In essence, this is the price channel that we can see price has been rising in ever since when? The beginning of the week, really. Ever since October 1st out here, the low that was put in at about the 1428 level. I could go back further, but if we just take a look at this rising price channel, that is where the ES Mini, the S&P, is moving in. Anytime that the bears have tried to take control, all they've been able to do is bring it down into this channel line. Today may be no different out there. I mean, we had the jobless claims came out this morning, I believe, at about 8:30, they were up about 4,000 to 367,000 versus the estimated 370,000. Still absolutely horrible. We had Super Mario Draghi was out there on the stump. I don't know what he actually said. However, if I just simply go over and take a look at the euro, all I have to do, and this would be the euro-US dollar currency pair. If we just switch over there, all I need to do is see how the market responded to whatever Super Mario Draghi said. And we can see here, You've got the euro up today. It's trading out at 129.832. What's that do? That puts a little pressure, a little kibosh on the king dollar back 40 ticks right now. Now, if we take a look at the euro, if you've been listening to me on Tiger TV, one of the patterns that was, well, there's several patterns out here, but we're taking a look at, originally we were taking a look at that head and shoulders, inverted head and shoulders pattern that was made out there, and you had the euro punch through that area. That punched through an area, the neckline, that was called the resistance area. It did that on September 7th. In fact, it was really Super Mario that started that punch through that old resistance area. When you get through resistance, folks, what happens? It becomes support. What does the euro do? Number one, it makes a 1.618 butterfly. You do a 1.618 butterfly, you've got a really great probability that the euro is going to go ahead and pull back. When you're making it, completing a pattern, and you get a doji up there, it means a whole lot more than the doji somewhere in the middle of the move out here. So there it's completing a pattern. That very next session was the leaf falling off of the tree. You had a lower close out there that said the euro wanted to pull back. Where is it going to pull back to? You know, when you have a battle, just think about it like this. This is nothing more than the bulls and bears each day going to battle. They clock in each day. You know, I've got this little comic that I put on my inside my special report, Candlesticks, Silent Signals, The Speed of Trust. You should download it. If you haven't, you got to ask yourself why. There's actually a little bit of humor in there. There's probably a image that maybe will take you back that you saw, you know, because when we take a look at charts, there are always two ways to look at it. There's going to be the bullish case and the bearish case out there. Why? Because they're punching in. Now, I love to look at candles because the candles really release the information to me, just like they do at swing points, as Tom has taught us out here. And as we take a look at this, the battle of the bulls and the bears, you had the euro pull back to where? What used to be old resistance became new support out there. Look at how the euro acted, and it was a little trampoline effect right off of that line, folks. 877-927-6648. The euro wants to head back up and test out that 130 area. That'll put a little juice in the marketplace. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And, you know, one of the folks in the den smiling upon all of us, he wants to pass along a fantastic book out there. I haven't had a chance to read it, but I'm going to go ahead and pick it up, called The Inner Athlete. So The Inner Athlete, he said, it talks about the story of smiling out there, plus a lot of other great feedback for all of you traders. Says it's a must-read. I believe him. I'm going to check it out. I think you should as well. We've got the market smiling at us. We've got Eric in Knoxville. I can see he's got a huge smile from a mile away. Eric, thanks for calling. Thanks for holding.
Oh, you're welcome. I am smiling. I'm here in my office by myself, but I'm still smiling.
I love it. Oh, I love it. That's great. Thanks for calling. You wanted to take a look at JDS Uniphase?
Yes, I do not have a position, but I do trade this quite often.
Okay.
And I'm all just looking for a trade.
Yes.
And I'm looking for the long side.
Okay. All right.
And I'm getting just a few, I don't know, just different signals being thrown at me here, but just was wondering what you thought of it.
Okay, great. Well, one of the things that I did, and folks, this is a ticker symbol here, if you're following along with us, is JDSU. Their 52-week high out there, 15.17, 52-week low, 8.47, trading at 11.75 right now. And you know what I did, Eric, was I put the weekly chart. Have you had a weekly chart of this up on your screen by any chance?
I did not, but I will do that right now.
You know, one of the nice things on this is you've got a high volume high out here on the weekly chart. Takes you back to the period, the week of February 18, 2011, 141 million shares up there. You don't really have, you had a, let's see if this, let me pull this back just a little bit here, this volume down day right here. You did have some volume off of the high out there, so it's kind of a little touch and go, but probably on the monthly chart. Well, let me see what the monthly chart is. Then we'll get back to your trade out here. But I did notice that high volume high out there. Where this thing does want to trade to, it wants to get into the 1852 level. So you're at 1175 right now. Maybe it's 18. I'd say that from the 1709 to the 1852 levels where it wants to trade to. So that's on the monthly. That's on the weekly out there as well. Let's go take a look at the daily chart out here. So right now, what JDSU folks did yesterday, and really the day before. So let's take a look at Tuesday first. Pulls back with 7.8 million shares, in essence, taking out a swing point. The swing point I'm referring to is September 26th that had 6 million shares. So it takes out a swing point. It's possible that it's setting up an A to B equals CD down. The line that's really been drawn in the sand here, Eric, happens to be this high volume little breakout here on August the 15th. Now, it's still trading inside that bar. That day had 19 million shares. So as it was pulling back and getting past a swing point with higher volume, it was also running into an area where the bulls absolutely were in charge here. And that entire price range is basically going to be in the area of 1096. That would be the low. And now I'm looking at a set of candles around September the 4th. So initially, I would say, your best trade area is if you can get this thing to pull back into somewhere around those candles in September 4th, somewhere around the 1150 mark. In fact, the low of the August 15th area is 1128. So let's just say 1128. You'd love to see this equity get below 1128, less than 19 million shares, reject it, close up higher, and then what you really want to do is you want to see some kind of bullish candle, or you want to see some kind of other volume come in, and then you can go ahead, and this could be setting up an A to B equals CD, depending where this thing moves down to. Just simply the A, B, C, D structure on this right now could take you, just let me pull this off to the side here. Let's see if this happens to match up to the weekly and monthly. This takes you to the $16 price range, but really it would do more than a 1-to-1, so around $17.40. So it all lines up like that, but what you need to do, in my opinion, is, and I think you're even sensing it as well, because you're getting some conflicting signals here, is wait for some other test. Wait for it to tell you what it's going to do inside this August 15th level, where you've got the bulls certainly hanging out here. And let's see if they're still there. And they'll show themselves. They'll show themselves either by some volume or a candle pattern out there. Is that kind of what you're seeing as well?
It is, yeah. I was looking at that level, and I was thinking, too, that I could have a really nice tight stop in there. I wouldn't have to give it a whole lot. It could prove me right or wrong right at that point. So,
and you absolutely can do that. The one thing, though, that at least the day that you're entering the trade, the problem I have with tight stops is that it means that I think I know where the market could trade to, where the bears and the bulls are going to go ahead and take over. And so at least the day that I enter the trade, you got to be aware of that average true range. And that means over the last 10 days, the average true range from high to low on JDSU is 47 cents. I say you've got to have a stop outside of that because that's just average. And I know you, Eric, you are extraordinary and outstanding. So it needs to be some Fibonacci expansion of 47 cents. Might be 1.272, maybe 1.618, but at least do that on the day of the trade because I'd hate you to be right, but just to be wrong. Okay?
Yes, get it. I got it. Thank you so much.
All right, thanks for calling. 877-927-6648. Give me a call, folks. Would love to hear your smile as well. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. You got the Dow up 49 points right now. S&P's up 6. Composite up 5. Small caps up just about 2 points out there. Microsoft trading down 11 cents right now. Intel off 21 ticks. Come on, Intel, get your act together out there. You got Google up $1.64. Cisco pretty much flat, up 8 ticks. Apple up 70 cents. We'll certainly take a look at the Apple chart out there. Let's take a look at what's popping and what is dropping in the marketplace. The lead dog in the clubhouse right now, Humana Inc., HUM is the ticker symbol, up a couple bucks out there. That's about 3%. You've got Google up next. That's up really flat out there, $1.55. You got the Icky Bank, ICICI. IBN is their ticker symbol. They're up 4.5%. I believe they provide some type of financial services to banks out there. You've got eBay trading up 3% this morning, up $1.48. Netflix up about $1.60. That's up 3%. Mattress Firm up 80 cents. Kraft Foods up $1.19. Murphy Oil up $1 as well. To the downside, you've got Informatica Corp, INFA, off $8 and change. Ooh, they're getting nailed this morning, down 23%. We'll go ahead and take a look at that. Let me see. I don't think was there some earnings release out here? Let's see. Looks like maybe just some guidance. Total revenues, just gave some guidance out here. So the guidance apparently not very good. You've got Nuvasive Inc., NUVA, also getting hammered this morning, down $8. That's down 33% out there. You've got HMS Holdings, HMSY, trading off by 15%. That's down $5. Teradata Corp, TDC, off $3 and change. Steve Wynn Resorts out there, WYNN, struggling this morning, off a couple of percent. You've got QLIK, QLIK is the ticker symbol. They're off 8% this morning. Avery Dennison, they are down about 4%. And again, 877-927-6648. I think one of the charts really to be paying attention to today is going to be the Russell 2000 chart. Why do I say that? You know, if we take a look, Russell 2000 has been weak out there. And so if you want to, what you want to be able to do when you're taking a look and trying to get an idea of what the market is doing, you want to be able to take a look at weakness and strength. So if we take a look at weakness, it certainly is going to be the Russell 2000. Now, I'm looking at the futures contract here, and you can see the Russell 2000 There's a little line that I've drawn out there. That's the low of September 13th. That's the QE3 date out there. You've also got the candle that it's really trading inside, which happens to be Super Mario Draghi. That's the September 6th level. What the Russell 2000 futures has done here the last 2 days, it's really taken a timeout. You've had two doji candles coming into an area of support and resistance out here, and and so it's taken a breather. The question is it taking a breather to move its way down? Or is it just simply going to be rejecting price out here and it wants to go back up and at least test the highs out on the Russell 2000 futures, which would be the 852 to 865 level? Let's just simply go over, take a look at the ETF. Let's go take a look at the IWM, see what the IWM has in store for us out here. So as we take a look at the IWM, let's just take a look at the action. First, the action from yesterday, a sideways day. 38 million shares. Was it releasing any information to us? Was it really testing anything out there? Hard to say. It certainly didn't test the high. Well, it may have tested the high and the low of the prior session. Of course, the prior session, only 25 million shares out there. So it's kind of losing some steam on the way down. What you really like here, from a bullish or bearish standpoint, you'd like to see it test the September 26th low. That's 80 to 84, and either reject it or just simply push through it. That's got 42 million shares. So it's got 42 million shares down there. Now, 2 days ago, as I said, 25 million shares. Not enough to even come close to trying to push down. Yesterday, 38 million shares. I do believe the IWM, the Russell 2000, that is one of the areas to be watching out there. I think Apple is also something that you want to be paying attention to. If we take a look at the Apple chart out here, you've got, well, that was JDSU. Give me a moment here and we'll pull up Apple. Apple trading out at 669 right now. Now, what Apple has done, Apple went ahead and it tested my hammer candle. That's the hammer. That's your hammer candle as well. That happens to be the low of September 12th. 25 million shares. That area was tested. It was rejected. That was $656. It was tested and rejected with a little doji on October the 2nd. That was 22.5 million shares going against that 25 million shares. Yesterday's close up, to me, says Apple actually wants to trade higher out there. Only 15 million shares. So it didn't have a lot of conviction behind it, did not have a lot of juice. There was a comparison of some charts that I put in this morning's newsletter for my clients, and it certainly does show the underlying weakness out in the marketplace out there. You should check out those charts as well. If you've never tested my newsletter service, go to the homepage at tfnn.com. You get 30 days of education, and it's with a money-back unconditional guarantee. In fact, just simply time it with your credit card so that when you've got your date that's up, go ahead and sign up for my newsletter. And that way you've got absolutely no out-of-pocket cash just to simply test out the newsletter. But yesterday's action inside Apple, although not from a volume standpoint, says that Apple still wants higher price. We'll see how this trades. In fact, let's go ahead and put this on an intraday chart out here. Let's go take a look at the 10-minute out here. Now the 10-minute, let me just refresh my screen, make sure I've got all of the data, because on the 10-minute chart, let's just wait for just a moment. Okay, now we're off. So now what we've got here on Apple, I don't see any high volume lows. We take a look at Apple as was moving off of the lows yesterday, and the lows put in here, what was it yesterday, was it? October the 2nd. That's when Apple got down to the 651 level. You can see the way that it moved out of there with some volume accelerating. Down here, just simply consolidating those gains. Yesterday's move up in Apple was up with volume out there. And now at the first 10-minute session, you've got volume also, as it's pushing down here, but it's going to need more juice than it has given us at this stage. That is Apple, just squeezing a little apple juice out there as we speak. Let's go take a look at some of these stocks here that are popping and dropping. You've got Rand Gold, GOLD is the ticker symbol. In fact, we didn't even cover the commodities. We'll go ahead and do that here just to take a look at where they are trading. But let's go take a look at Rand Gold. That is popping this morning. It is up. Let's just see what it is doing here. Trading out at $125 even Steven out there. This thing here has a very nice sign of strength out here. This is a wide accelerated volume, not really wide price spread, but it's really that September 21st level. Now, the high of that is 124.80 or 125.17, and this gold miner equity has let's see if it's done everything here. Let's go take a look at the A to B equals CD patterns on this. So your A point, I'll tell you what it was. The A point that I'm looking at, folks, is the low from May 16th. That was out at $73.20. Makes a run up into the swing point on June 20th. That high is at 96.70. 683 million shares. Let's go ahead and let's draw the horizontal line so we can take a look and see if the B point was taken out with volume out here. So let's draw that line. The volume on that candle right there. There she blows. And you probably want to see a thicker line than that. There we go. Make it the red line. Okay. So as this gets through the B point here, which happened to be August 19th, did it on a little bit lighter volume. That was 535 going against 683. Pulls back down. Let's see if this thing ever did come off of it with volume. Really never did. You get some volume after you surpass the B point. Went up. It's already made a 1 to 1.618. It's actually done a little bit higher, almost a 1 to 2 A to B equals CD. The 1 to 2 takes you to $130. If this equity does push up there, I would be careful because when you do a 1 to 2 A to B equals CD, folks, it's almost always an immediate reversal. Now, you'd wait for the candle signal to tell you that. If we take a look at this on a longer-term chart, let's just switch over to the weekly out here on Rand Gold. So this thing is at all-time highs. Not traded at all-time highs, but came past the, let's take a look at the swing point from 11.11.11. You got to like that on a gold stock. That swing point high was 120.73, 3.6 million shares on the weekly chart. Got over it with 5.2 million. You did that on September 21st. So that's taking it out with volume. That says that this thing certainly can run higher. That is on Rand Gold. Let's go take a look. Somebody wanted me to look in the den at Netflix. So let's go pull up the Netflix chart out there and, talk about a company where, every decision that you do make, folks, it is important because decisions are what shape your destiny out there. And we're going to take a look at the Hewlett-Packard chart as well because I'm thinking that maybe the board would like to replay their decision on Mark Hurd back there because Hewlett-Packard is a stock that is absolutely hurting out here. But as we take a look at Netflix, and Netflix, certainly if you take a look at Netflix, this thing here falling out of bed from a high in July 2011, July 14th or so, when it was trading in the $300 range, trading now at 65 bucks out here. And what this equity has a little bit of a sign of a strength here yesterday, but I don't buy it. I don't believe it because of what it's going into. And if you take a look at yesterday's action, October 3rd, 10.8 million shares. But what it's going into a downdraft of 24 million shares. So it's got a supply line out there. I suspect, your next, if you're long on this stock here, got to be careful as this gets to the 66.80 level. What I would do is just simply tighten my stop here. If you're looking to play a short side of this thing here, what you'd have to be paying attention to is this is really trading right now in a fairly tight consolidation range. What I mean by that, the highs of 67 bucks, let's call them, to the lows of $53. So you'd have to put together your trading plan out there. Now, that $53 level should get tested. It's a high volume low. 12.4 million shares, so you've got that. Now, that low actually was tested, so I take that back. It was really tested here the day of September 26th. So let's just take a look at that test. Let's see if the actual low of that area was tested. We're going to take our line and draw it across it. That is on the September 4th swing point out there, and it looks like it was. The low there was 59.13. You got a test of that area at 50, did I say 59.13? I meant 53.13. That was 12.5 million shares. Tested with 5.2, so that's not a bad test here. So, maybe what you do is you take a look at Netflix from a consolidation trading range out there. And that's my call on Netflix. Let's go take a look at Hewlett-Packard. Why? Because Hewlett-Packard is actually, it's a great stock chart out there. HPQ is the ticker symbol. It's not a great stock chart if you're in the stock. Down again this morning, trade out at 14.33. I believe Meg Whitman said that Hewlett-Packard's going to need, what did she say? It's a 4 to 5 year turnaround in the business plan. But let's first take a look at the weekly chart out here. Why the weekly chart was because last week what Hewlett-Packard did was it gave us a hammer candle. I love hammer candles out there. You should learn how to trade hammer candles. You should be aware of hammer candles if you are in any equity out there, because they absolutely are always giving you information. Now, you've heard me say on a hammer candle, you get to close below it. If you're long, you're wrong. It is as simple as that. It's like a smile, folks, is contagious. Well, when it comes to a hammer, if you're long on a hammer, you get to close below it. Just simply get out of the stock. Now, understand where the next level is down below it. When we take a look at HP, I'd have to put this on a monthly chart. So if we do that, which we will, and we know that there was a close below last week's low, that happens to be, well, actually I got the monthly chart up here, so I can't do that. But what we can see is where HP wants to at least pull back into is going to be $10.75. Now you've got 265 million shares down there. So far this month, it's done 182 million shares. I suspect that Hewlett-Packard is moving into that area with volume. That'll send Hewlett-Packard back to levels that it hasn't seen since 1992 or earlier out there. So this equity is in a world of hurt out there. Now, in addition, I'm going to go back to the weekly chart. So in addition to making the weekly hammer out there, it also was making a three drive to a bottom pattern. I mentioned this on the Money Master show that follows this, the Tom and I do. Let's actually, let me see here. If we draw this three drive to, I'll do it on the weekly chart here. We're going to start with is the first drive is going to be the low of August the 3rd out there. That low was 1741. To the high that came in on August the 24th. I'll just simply extend it down right here. And so you can see it made really nice 1.272 expansions if we take a look at the period of time, because when you're finding these three drive patterns, what you want to have is you want to have price, expansion, and time all match up with each other. If you've got to force it to work, guess what? It's not a three drive pattern out here. Well, if you just simply take a look at the number of weeks between the lows, you'd go from the week of August 3rd, that was your first drive, the week of August 31st, that was your second drive out there, and then finally last week. It's perfect when it comes to three drives with regard to time. It is perfect when it comes to price out there, and then it's just a matter of now watching the equity. Well, what you were looking for, if you were listening to me and Tom discuss this here, what you were looking for was a sign of strength. There was no reason, just because that, in my opinion, to have taken that trade, knowing that there was a lot of heat on Hewlett-Packard out there. What I was waiting for was a sign of strength. Well, we got a sign yesterday, didn't we? It was a clear sign out there. That sign, folks, was a major sign of weakness. This doing 140 million shares yesterday and trading lower. Hewlett-Packard on its way down to $10 and change, and maybe lower than that out there. 877-927-6648. Green arrows right now. You got the Dow up 39 points, S&P up 5, Composite up 3, Russell 2000 just slightly up almost a full point out there. 877-927-6648. Smile, folks. It is a fantastic morning. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. Dow up 36 points right now, and let's go take a look at the XLF. That is the financial sector of the S&Ps. Let's go see what she is doing out here. If this market's going to have any juice, it's going to be because of financials, energy, and the tech sector out there, the chip sector, semiconductors. Let's go take a look at the XLF out here. You had some decent volume here yesterday. Now we'll take a look at the XLF. Again, just like when we take a look at the indexes out here, key dates are going to be QE3 and Super Mario. So again, that is the September 13th date and September the 6th. Great benchmarks here. What the XLF did was after the QE3 announcement by Uncle Ben, in fact, the minutes to the FOMC get released today at 2 o'clock. So the minutes are going to get played up again, the hype in the market. Maybe we'll see a little bit of volatility, at or around that time frame out here. I believe it's 2 o'clock that those minutes get released. And if we take a look at the XLF, had a big thrust, big sign of strength, wide price spread, accelerated volume on September the 13th. On September the 14th, the next day, you also had some good price spread as it was making a high at the 1644 level. A little doji out there. That next trading session a little bit lower. So what does that suggest? It's going to pull back. Where's it pulling back to? Well, where it pulled back to was right in between. It looks like 50-50 of Super Mario and Uncle Ben out there. As it was pulling back, no real great volume on the pullback out here. And so nothing certainly in comparison to the upthrusts out here. So if you take a look at yesterday's action, you had the XLF moving higher, did it with 55 million shares. That 55 million going into about this 68 million here from September the 25th, but going really into 34 million, where you saw it start to really break down a little bit. That was on September 21st. You've got the XLF trading higher this morning. It looks like where it wants to get to first is 1606. You're at 1595. 1606 happens to be the 0.618 level. That would be like you coming to visit us here at TFNN. You'd get off on floor 6 just to visit us at Suite 618. We may see some folks get off of the elevator at the 1606 price level. I suspect that that area will get hit today. That is on the XLF. You want to pay attention to that, just like the Russell 2000 futures out there, maybe the IWM, as areas for your clues out here. If we go take a look, we know we didn't take a look at any of these stocks here that were really dropping. Let's go do that. Shame on me. Let's go take a look and see what Informatica, INFA, is the ticker symbol, what they've got in store. Gapping down here. Oh, it looks like it's second day gapping down with volume out there. That doesn't look good. Let me pull up the chart here real quickly of Nuvasive, N-U-V-A as well. Let's go see which one actually looks the worst out here, and that I can cover in about less than a minute. N-U-V-A. That is down 33%. Oh my goodness. Now let's refresh this screen. This one's okay. There we go. Whew. All right, so Nuvasive here gapping down to its last sign of strength, although doing it with extraordinary volume this morning. This thing had a sign of strength May 1st. Look, it is one of the reasons why you want to buy breakout stocks and wait till an equity comes back there, because if it comes thundering back there, as this equity did right here, you don't want to be in this. It broke out, folks, on May 1st with 5.8 million shares. Only been trading for less than 30 minutes. Has already done 5.5 million shares. That is on Nuvasive. Stay tuned, folks. Tom and I will be up next for the Money Masters. Then we go to Basil Chapman up to Newton, Mass. Larry Pesavento today from 12 to 1. Darrell White 1 to 2. Darrell Martin 1 to 2. David White 2 to 3. Ken Shreve 3 to 4. The Tom O'Brien Show from 4 to 6. Smile, folks. It is absolutely contagious out there, and that is the best way to change yourself and change the world, one smile at a time. Thanks for smiling on me and being here. Stay tuned. Tom and I will be up next. If you're off to start your day, have a fantastic, terrific Thursday. I look forward to seeing you in the morning. Take care.